And so moving on to the election end of things, before I pass things to Andy, this is, every election cycle, this is about the time we start fielding numerous questions about a particular election and its market impact. So I'm going to spend a little bit of time here. And I'm going to start by saying this. As investors, no matter what the theme is, it's in our nature to try and simplify things. It can be especially fun in our minds to draw up, conclusions like here's going to win, here's who or what party is going to win office, and this is how the market's going to react as a result. Each election has its own set of ups and downs and big question mark events attached to them. But it's in our nature to try and extrapolate an election outcome and translate that to some sort of market performance. But the reality of it is that the data just doesn't support it. So what we have here, and we went back as far as we possibly could, we're looking at previous administrations and the corresponding market returns while that administration was in office. So go ahead and look at this and tell me if you identify any consistent pattern. And if you're having a hard time while you're doing it, because there really is no predictable path that the markets take based on the individual or the party that's in office. And the reason being is there's too many things that influence stock prices. There's hundreds, if not thousands of variables that play in the market returns over day-to-day, month-to-month, year-to-year basis. We're giving any president way too much credit if we think that they themselves are going to be able to move the multi-trillion-dollar behemoth, which is the stock market, especially with some of the checks and balances that we have in place in our government in particular. So presidents and prime ministers of other countries, individual companies, pandemics and medical advancements, developments in technology, commodity prices, and a number of other things will all play into the markets. So and for that reason, there's no one individual or even party that can swing things in their own favor as a result of this. So if we look at the numbers and we look at the average return of the market for each of these periods, regardless of our political affiliation or our beliefs, we want to capture this. We want to capture these attractive average returns over time. High long-term returns means a greater ability to meet our goals and more certainty in our plan. So we want to capture this no matter who's in office. And that means sometimes dealing with the uncertainty that comes with each election. It also means, and especially now when emotions are a little bit high in both directions, it means dealing with political wins and losses of our own preferred party. So it's a very exciting thing to talk about and try and dream up market scenarios, but the data shows that there's absolutely no connection between who's in political office and what the market's going to do, given the number of variables that are at stake. So hopefully that it starts to answer some of the questions people have about the election. We'll build on that as we head into the fall.